Are you looking for a super short-term trade with a high rate of return? Let me show you how to find it and check it out to make sure it's good. I'm going to show you 3 0 DTE trades. I'm going to show you how to find them, how to check it out, click by click, and see if it's good, and how to put the trade on. And the best part about it is I'm going to show you how you can test these trades, not even using your own money. It's going to be amazing, so make sure you stay until the end. And be sure you subscribe to the channel because I'm putting up videos like this all the time, and you don't ever want to miss out. Alright, so let's just jump right in. Hey guys, so we're going to check out the stock scanner, and basically I'm just going to do a simple scan for 1 to 2 day expiration trades. I'm going to click find trade ideas. Now basically most stocks have Friday expirations every single week, but there are a handful of tickers that have expirations more frequently. So these trades, as an example, have expirations every Monday, Wednesday, and Friday, giving you more flexibility when you're selling puts and covered calls. Now I'm going to give you 3 great ideas in this video, and I'm going to show you exactly how to tell if it's a good trade or not. So first, we're going to start with the stock scanner that pulls up the trades for us. Now right off the bat, my personal favorite is Tesla. Or also you could go to the Trade Builder tab and just check out all the puts there on that one page. So for example, let's check out Tesla. Now I'm going to use Monday expiration date because that would be a 0 DTE trade, meaning you would put the trade on Monday morning and it has a Monday expiration. Now when I'm looking for a strike price, I'm always looking at the delta, because delta is the likelihood that the stock is going to drop that much before the contract expires. So I'm looking to balance kind of a low delta, but still get paid some premium to make my risk worth it. So for example, Tesla right now is at $341 per share, but I never want to pay retail. I always want to buy a stock at a discount if the stock went down. So let's look at a 335 put. Well, that's trading at $78. So what we do is we evaluate the trade to take a look and see what the rate of return is. So the card pulls up all the data for us. So for example, the stock right now is $341 per share, and it would have to go down below $335 before the end of the day. So it would have to drop about 2% over the course of Monday. Right now this is trading for $78, and we need $33,000 to put the trade on if we're not using margin. So our annualized rate of return is about 42%. Now we can also evaluate the trade if we went a little bit more conservative, let's say with a lower delta. Now that trade pays only $45 and our rate of return is a bit lower, 24%. Or we can go a little bit more aggressive, let's say a 40 delta, because let's say if we're totally okay with buying shares of Tesla because we like the stock anyway. Now if we go closer to where it's trading, this one's paying $212 for a 1 day trade. That is over 113% annualized on our money. Now let's go back to our list here, because there's a lot of really good stocks on this list. Another one that I really like is Apple, because Apple is like the biggest company in its class. So let's take a look at Apple here. We're going to type the ticker in here, and we're going to fetch the data. And we're going to look at a Monday expiration, and then again, we're going to look at the strike prices. So let's start with kind of something middle of the road. Let's say an 18 delta. That's a 302.50 strike price. And right now the stock is trading at 305 and change. So now this one pays a little bit lower rate of return because it's not as volatile as Tesla. So it doesn't have as much swing up and down. For example, this contract is paying $30, so our annualized rate of return is about 18% per year. Now, just like with Tesla, we can go a little bit more conservative to see how that would affect our rate of return. Let's say an 8 delta, super unlikely that it's gonna go that low in just 1 day. In fact, it's only paying $16, and our annualized rate of return is a little bit less than 10%. So very unlikely that the stock is gonna drop that low in just 1 day. And then let's do the same exercise and go a little bit more aggressive, closer to where the stock is trading. Let's say a 305 put, and we can see how this one's paying $110, and our annualized rate of return is 65%. See, the app is doing all the work for us. Let's check out Google as well, because Google is one of my all-time favorites also. So we're going to type the ticker in here. So many different choices that you can trade. And we're going to choose Monday expiration. And again, we're going to start with kind of like middle of the road. Let's say a 432.50 strike price. That's a 22 delta. That contract is paying $70, and our annualized rate of return is 37%. So we can go a little bit more conservative if we wanted to, a 340 strike, And that's going to bring our annualized rate of return down to 19%, or we can go a little bit more aggressive, let's say a 345 put, and you see how our income is a bit higher, $162, and our annualized rate of return a little bit over 85%. So we can use this app not only find trades, but also evaluate them and see which one fits what we're looking to do the best way. Now, I obviously can't tell you what to trade because I don't know how much or how little risk you want to take, or I don't know how much money you want to invest, and I don't know what your overall goals are. But what I'm doing is giving you the tools that you can find the trade, and then you can evaluate the trade in order to make yourself income, not just every single week, because in this scenario, we're looking at stocks that have expirations 3 times every week. So for example, trading this Google contract, how would that make you feel collecting $162 3 times a week on the same amount of capital, about $34,000? This is totally why selling options can be completely life-changing. No exaggeration. Now, also, I told you that you can practice these trades without even using your real capital. The app has an amazing module called Smart Paper Trader, and you can use that on a cash basis or even on a margin basis to learn how to use margin more effectively as well. So for example, if we go back to that Google trade, we can click this button and send it right to the Paper Trader account. And as we're trading in the Paper Trader module, not only are we able to see all of our positions, but we can also see all of our transactions as well as our realized gain loss for any period of time, and sort it by ticker and by options and or stock. Lots of flexibility. So what do you guys think? Is that totally easy? Listen, it takes a little bit of time to learn selling a put, selling a covered call. Once you know the fundamentals, you literally only need about 15 or 20 minutes a day. And you can do short-term trades, you can do longer-term trades, you can basically do whatever fits your lifestyle the best. Me, I generally like 1-week trades. That's my favorite. So if you're looking for the software that I use to run my trades, check out the links in the description below. Hey, birdie. And if you're looking for mentorship so somebody can basically hold your hand and make sure you don't blow up your account, that link is in there too. And don't forget about the Cressivo Cup. It is an off-the-hook paper trading competition where you can totally learn and not use any of your real capital. There's no better platform to learn than this challenge. So that link is in the description below too. Thanks for watching. I'll catch you in the next video. Happy trading.